Welcome back to QAV America, Tony. QAV America, episode 10. This is. Got some big news, Tony, that's just popped up on my news alert. The Trump family's next venture, a gold smartphone and mobile phone service. So there you go. Get your pre-order in for one of those. Going to be all made in America and sell for $500. So
really,
can't wait to see that.
Did you see the return that showed that the Don had made $70-something million out of his meme coin?
How much? Only 17 million?
I think it was 79 million from memory.
Oh, right. Oh, I thought he would have made a lot more than that. There you go. It's a bit of a shame. Feel sad for him now that that's all he made. Thought it would have been billions.
And he left the G7 conference without meeting our Prime Minister.
Yeah, of course.
Was meant to meet our Prime Minister, but he's ducked off. He's ducked our Prime Minister.
Listen, if you had a good reason to avoid meeting with our Prime Minister, wouldn't you take it?
That's right. Well done, Donald. Well
done. Yeah. Well, Tony, we're going to talk. I've got a pulled pork or a deep dive to do on another American listed stock today. But before we get into that, I thought I should do the portfolio report.
Please.
The US portfolio, the QAV U.S. portfolio, when I did my weekly newsletter this morning, for the last 30 days, it was up 3.3% versus the S&P 500 up 1.25%. Over the last 12 months, our portfolio was up 34% versus the S&P 500 up 11%, which you said on the last show was about 11. I thought it was much more than that, but you're right. It was only 11, the S&P 500 in the last 12 months. And since inception, September 2023, our portfolio is up 55% versus the S&P 500 up 35%. That's probably the number I was thinking of.
Yeah, right.
So that's how we're tracking. Pretty good still, despite not being the best year, like last couple of months has not been the best for our US portfolio, but this month it's doing pretty good. No complaints. Have you got anything to talk about in terms of US stuff before I get into the deep dive today, Tony?
No, I don't. I have been reading the Wall Street Journal, but none of our stocks have appeared in the Wall Street Journal, so I can't really comment on stock-specific news this week.
Well, one thing we can mention is that crude oil is a buy again. As we've talked about on the show before, when we're looking at investments in companies that are tied to underlying commodities, we tend to not buy them if the underlying commodity is in a sell state, judging by the 3-point trend line. Crude oil had been a sell for quite some time, and there was just a little thing. People probably haven't seen it on the news, but Israel and Iran started firing missiles at each other. I don't know if anyone caught that in the news in the last week, but that has caused the oil price to spike quite a lot. It became a buy again, so we've been able to look at buying or adding some more oil stocks. I added an Australian oil stock to one of our portfolios yesterday. Funnily enough, when I was looking through our US buy list to find a company to talk about today, almost every company I looked at was either a shipping company or a financial services company on our buy list that I ran last week. And I was so sick about talking about shipping companies or financial services companies that I had to go quite a way down in the list to find one, which is actually a financial services company.
It's
more or less. But it's a little bit different.
No less.
Well, it's a conglomerate. It's a bit like Berkshire Hathaway. You could say Berkshire Hathaway is essentially an insurance company. Geico. Yeah, yeah.
Yeah.
But it's also a lot of other things. And so is the company I'm going to talk about today, which is ORIX Corp on the New York Stock Exchange. Its ticker is IX, the number 9
Number 9.
in
Number
Roman
9.
numerals.
Number 9.
It's listed on the Tokyo Stock Exchange as 8591 is its code in Japan.
Isn't 8's the good luck number in... No, that's China. Sorry, might be the same in Japanese. I don't know.
Yeah, 3s, 9s, I think, get a lot of good luck. Do you know why they have numbers?
I do not. No.
Well, I am here to enlighten you about numbers. Yeah.
Oh, Japanese... is it because of the kanji? They can't put the alphanumeric or the alpha characters into the stock exchange. Okay.
This is why you used to win all of those, I was going to say not charity.
Quiz shows.
Quiz shows. Yes.
This is why I spend my days mansplaining to AI. That's going to be the title of my autobiography.
I actually suspect
mansplaining to AI.
I'm going to do an investigative journalism documentary that will, I think, uncover that behind all of the AIs, it's just somebody's calling you and asking you to answer all the questions. And
Phone a friend. Yeah. I'm going to launch an AI called Phone a Friend.
Phone Tony.
Yeah.
When Japan's exchanges modernized after World War II, they needed a code every broker could punch into the Western-built ticker tape machines of the 1950s, and kanji wouldn't fit. And the Roman alphabet wasn't in common domestic use in Japan, so what they had was numbers, and everything ended up with a number, and that's a security code. So 1s are food and textiles, 2s are chemical, numbers starting with 2 are chemicals and pharmaceuticals, 3s are steel and machinery, 4s are electrical and precision, 5s are IT and electronics hardware, except for Sony, which is 6758. Services a consumer, like ORIX, they're usually 6, but ORIX isn't because it's financial services, so it's an 8. 7s are transport equipment, Toyota is 7203. ORIX, 8s are financials and real estate. ORIX gets an 8 because of that. And 9s are utilities and telecoms. So there you go. That's what
really
you
interesting
need to know. I know,
Thank you.
right?
Thanks for that. And I remember riding on the Japanese subway and being totally fascinated by watching people use mobile phones and texting. And if you can think about it, we have 26 letters plus 10 alphas and a few other characters on our keyboards. Kanji is almost limitless, I would think. Certainly there are some common characters, but yeah, they would have the shortcuts on their phones and then call up a screen and then tap a screen, and it was just amazing to watch them use their phones to send text. It was incredible.
So we're going to talk about ORIX, and as I've told you offline, it was interesting to me for a number of reasons. It is a conglomerate. It's been around a long time. I don't know much about Japan or Japanese businesses, so that was interesting to me. But I also picked up some issues with our checklist on this one due to currency reporting in Stockopedia. It came out with a positive score anyway, and I'll explain how and why when we get into the numbers. But I just want to highlight for anyone using our checklist and using Stockopedia for the underlying numbers, be careful when it comes to companies like this which are an ADR. So they're listed in another country, they have an ADR in the US, because the reporting in Stockopedia is a little bit confusing and some of the numbers may not work. But I'll get into that in a level. So who on earth is ORIX? Australians will probably be familiar with ORIX because they're quite big here. They have quite a big operation here. They have big operations everywhere, as it turns out. But they also had a bit of a bribery scandal in Australia about 10 years ago. You across this, Tony?
No, it doesn't ring a bell, sorry. ORIX bribery scandal.
yes. So the
I know them as a
timeline,
fleet leasing company. Lease your car
yeah,
through ORIX. Yeah.
that's their primary business here. So in 2015, the Australian CEO John Carter and another Australian exec George Giorgio were arrested by the New South Wales fraud squad, charged with 4 counts each of paying corrupt commissions and money laundering to Coca-Cola Amatil's fleet procurement boss Brian Pereira. Um, they were allegedly paying him large amounts of money and giving him 5-star holidays, Mercedes Benz, and other benefits worth millions in return for CCA steering tens of millions of vehicle leasing business to ORIX.
How did they think, if it happened, how did they think they were going to get away with what, like the guy turns up to Coca-Cola with a brand new Mercedes, fresh from his trip to the Bahamas? It's like,
No,
I
but
don't know. Yeah.
the guy from Coca-Cola Amatil, Pereira, pled guilty. He got 6 years, 4-year non-parole period. The judge branded it systematic commercial corruption, but the prosecution unexpectedly withdrew all charges against the two guys from ORIX. Never really explained why. They both walked away free, no fines levied on ORIX. I think they were dismissed from ORIX or suspended or something. But interestingly, they both ran up very large legal bills. Carter, the CEO, sued ORIX's D&O insurer Chubb for legal fee reimbursement, directors and officers liability insurance, wanted Chubb to pay their legal bills. Chubb said bribery is an excluded act from your director's insurance, and the judge agreed, so Carter had to pay for his own legal fund. But it made ORIX tighten up global compliance, go through anti-bribery training, strict third-party payment controls, etc., etc. So,
And John Carter went back to Mars, did he?
yes,
Yeah.
yeah. You're familiar with that book and film.
And the movie, yeah. I
Yeah.
am. Books were great. I used to read them when I was a kid.
Who wrote the books?
Edgar Rice Burroughs.
Same guy wrote Tarzan, right? Was it the same
Mm-hmm.
guy? Yeah.
Yeah.
I never read them.
I think he lived in Tarzana, isn't it? The suburb in LA, named after his books.
Really? Oh, yeah, there you go. Look at you, Mr. Quiz Show. Quiz Show Kynaston. That's going to call you from now on. So, who on earth is ORIX? Well, they're kind of a financial handyman. Started in 1964 leasing office equipment, photocopiers, and forklifts. Anything companies didn't want to buy outright, you could lease from ORIX. Been around ever since, and they've bolted on lots of different lines of business: real estate projects, life insurance arm, a small bank, private equity investments, renewable energy farms. They even own a baseball team, the Osaka Buffaloes. And they earn money from all sorts of things: rents,
Go
interest.
Buffaloes.
Go Buffaloes. Yeah. Because I don't know about you. Well, I think Japan, I think Buffaloes. That's the first thing that comes to mind when I think Japan. Baseball and Buffaloes. Yeah, all sorts of businesses, plane leasing, you name it, they probably are in it.
And from the limited research I did on the company, they were kind of pioneering in that equipment leasing space as well, worldwide. I mean, it wasn't a done thing much before them to be able to easily go out and say, hey, I want to expand my business. I can't afford to buy 50 forklifts. Is there a better way of doing it? And, they found a solution. Yeah, sure, we'll lease it to you.
Yeah.
You won't pay for the whole lot. We'll make a margin over time. You'll be happy. We'll do a deal. It's a very innovative change to business that happened in the 70s from memory.
Yeah, fascinating. to think that that wasn't always around, right?
Mm.
It was a new thing, a new idea. Speaking of new ideas, ADRs. I'm not that familiar with ADRs. I don't know. Many of our Australian listeners may not be. Our American listeners may or may not be. But I thought I'd just explain what an ADR is for anyone who's not. ADR stands for American Depositary Receipt. It's like a wrapper basically for shares in a foreign company. The way it tends to work is a big bank like a JP Morgan buys actual shares in the company's home market, in this case Japan, parks them in a custody account overseas, then issues receipts that represent those shares that can then trade on the New York Stock Exchange or the NASDAQ, just like any other US stock. The bank handles all of the paperwork, all of the complexities with that. And Americans get to participate in trading in that company. When there are dividends, those sorts of things, the bank works it all out. They transfer it all into American dollars and pay it, etc., etc. They can be quite confusing, though. One ADR doesn't always equal one common share. And in fact, that was the case with ORIX for a long time. I think it was 5 ADRs equaled one share. And then there was a consolidation and it became 2 ADRs equal one share. At the moment, in ORIX's case, 1 ADR does equal 1 Japanese share, but it's not always the case. So I won't go too much more into it, but that's how ADRs work if anyone is interested. So the company ORIX has only really had 2 bosses in its entire history, which makes it interesting. The founder, Yoshihiko Miyoshi, ran the place until about 2014. He's still around. He's the honorary chairman now. He's basically the Warren Buffett, I guess, of ORIX.
Throws the first pitch for the Osaka Buffaloes.
Probably, and eats a lot of Japanese candy, drinks Japanese Coca-Cola. I don't know.
Well, not since the bribery scandal.
Yeah,
No, he's moved to Pepsi.
He's moved to Japanese Pepsi, yeah. He is an interesting character. He received his BA from Kwansei Gakuin University in 1958 and then went to Chrissy's alma mater, the University of Washington in Seattle, to do his MBA in 1960. Completed his MBA, returned to Japan, and in 1964 joined a little startup called Orient Leasing Company that helped pioneer finance leasing, and then became the president and CEO of ORIX in 1980, then the chairman and CEO in 2000, before becoming the senior chairman, honorary chairman in 2014. His replacement as CEO, it was his longtime lieutenant, Makoto Inoue, took over. He's only been with the company since 1975, so he's the new boy at the company, late bloomer. And the president COO, who's the new boy, is Hidetake Takahashi. He was born in 1971. So, fun fact, he was 3 years old when the current CEO took over the firm. Joined the firm. He's been there since April 1993. So he's the new boy. But I joke, but they've been around a long time, these guys. The guys running
Is this
the
like
company.
Are you being served when young Mr. Grace comes down onto the floor and he's like 80
right,
years old with a walking cane? Yeah.
Americans will have most Australians have no idea what you're talking about. Are you being
look
served?
It up. Are you being served?
Or don't. It's
or don't.
yeah. Ooh, what are the catchphrases?
Are you free?
I'm free. That's right.
Are you free, Mr. Humphrey?
This was a British sitcom that was popular in the early 1970s. Tony and I are both old enough to remember it fondly.
Very
it was
crass,
one of the
very base humour.
Well, but yes, very raunchy for its time. Would be
Mm.
seen as very lame today by today's standards, but at the time it was very raunchy. A lot of double entendres.
Hmm. Which were very obvious. They weren't really double. They were right out there.
how to make sexual jokes that could get through the censors, I think, was
Correct.
the
Yeah.
thing at the time.
Mm.
Anyway, so that's the management. Been around a long time, and have been running a very successful business, albeit scandal here or there. But who hasn't had a scandal? If you're around long enough.
And it was
Where
in
the
the
money?
Antipodes too. It wasn't like it was a,
Yeah.
the Osaka Buffaloes or anything important like that.
No.
No. Mm.
And like in its entire history, nothing has ever gone wrong in Japan's history. They've got a flawless, clean history. Where the money comes from. So last fiscal year, which ended March 2025, ORIX booked about US $19 billion of revenue and a record profit of about $2.3 billion. Roughly a quarter of that came from leasing, cars, trucks, and IT gear. Another chunk came from its life insurance arm, some from building and managing properties, and the rest from overseas lending, private equity deals, green energy projects, etc., etc. No single line dominates their revenues, which is interesting because they tend to smooth the ride out. If one of them has a bad year, the others smooth them out. But the earnings look a bit funny and a bit lumpy, which I think is one of the reasons why it's, from our perspective, discounted. It's got a fairly low prop CAF. As we know, prop CAF is kind of debatable how useful it is in a financial services company because it's so lumpy. But these guys even more so because on a fairly regular basis, I think, they sell something. They'll sell a business or a piece of real estate and book a one-time gain, which gives them a bump. For example, it sold a bunch of private equity stakes in 2022, and the headline profit jumped by 192 billion yen, or about $1.4 billion. And investors know that kind of windfall isn't going to repeat every year, so they tend to strip it out and just look at the underlying revenues, which are a lot more mundane and predictable. That said, ORIX tends to sell stuff on a fairly regular basis, so they have a number of these bumps that come along. Whether or not it's a deliberate part of their strategy or they're just opportunistic or they do it to drive up profits here and there, I don't know. But they tend to do it on a fairly regular basis.
Well, it's a big conglomerate. It's gonna have a transaction going on somewhere at some time, isn't it? Really?
Yeah. Reminds me a little bit about the mobile company I did a week or two ago. They're exiting this line, getting in that line.
Yeah.
They're navigating and moving things, and they're like Berkshire Hathaway. They're actively buying into sectors, exiting other sectors, moving around. There's another interesting thing, though, with financial stocks in Japan. Apparently, financial stocks in Japan often trade below book value. As we know, for decades, Japan had near zero interest rates and fairly sluggish growth. Banks, insurers, and conglomerates like this one could only squeeze out moderate returns. So investors tended to only assess them on net asset value on the balance sheet because they weren't showing a lot of growth. They basically weren't willing to pay anything over book value, basically, for these companies. Even now, half the companies on the Tokyo Stock Exchange still change hands at less than the paper value of their assets, which, from a value investing perspective, is interesting.
Fantastic.
Right?
Yeah, that's fantastic.
Wasn't Charlie big on Japan?
Yeah. And
Yeah,
Warren
right?
still is too.
Yeah. ORIX's shares in Japan go for about 0.9 times book value. So that gives you an idea of what we're talking about here. It's normal in Japan, although it looks cheap to us based on what we're used to seeing. There's another issue with them in terms of the ADRs, though. It's because they're a PFIC, a PFIC in the US. The IRS labels companies like ORIX a PFIC, a passive foreign investment company. This is a company that earns lots of interests and holds big securities portfolios. And apparently the IRS classifies them in a way that is a bit of a pain in the butt for American investors. You got any familiarity
No,
with PFICs?
I don't. But I'd be interested to hear if anyone any of our listeners does and can enlighten us on it.
Well, I can enlighten you on it, Tony, because
Oh,
I I I
thank you.
I did research on it. So
Okay. Oh,
if
you
you're
were
in a,
asking a rhetorical question. Sorry.
it was, well, it wasn't
Uh,
rhetorical in that I was just wondering if you knew, but I was
oh,
going to
okay.
prepared for the fact that you probably wouldn't because you
Uh,
don't deal in the US market much.
hmm,
So if you hold a PFIC, you have to file a nasty IRS form. It's an 8621 form every year. And you either
is that
need to
because
pay,
the IRS doesn't work? It uses kanji, so it has to have numbers
yeah,
in its return. Yeah, right.
yeah. And you have to fill out the entire reporting kanji just to make it more difficult. In
In the
triplicate.
country of origin for the holding, right?
No, you need to either pay tax on phantom mark-to-market gains
Mm.
for the stock every year, or you elect something called a QEF treatment, which is where you have to do it for every year when you finally sell it. So it's basically you're paying tax on phantom profits without having sold it, right?
Unrealized gains. That's
Unrealized
great.
gains.
Mm.
And so a lot of wealth managers in the US tend to blacklist PFICs because it's just very troublesome. Um,
Right.
a lot of paperwork according to the US tax code. And yeah, I mean, I've got a whole breakdown on the QEF is qualified electing fund. You basically have to issue a PFIC annual information statement. The company has to in order to let you do that.
Hmm.
ORIX doesn't produce one of those, so you can't even do that as an option for if you're an American investor. So it's the form runs 8
Mm.
parts. The one that you have to file, the 8621, asks for daily share counts, basis, elections, prior year adjustments, and interest computations. And if you miss a form, the statute of limitations just stays open forever. It's just a compliance nightmare. Warren would probably love it because I'm sure he loves filling out
Well, it's
paperwork.
another reason why the stock trades cheap, I suppose, is it's a headache.
It
But
is, yeah.
I guess the question is, and I know that I'm not giving tax advice, and I don't think people should do this, but chuck it into AI, fill out whatever you think, send it in. If it's hard for you to calculate, it's going to be even harder for the IRS to calculate. And if they come back and say, "Hey, you're wrong," just say, "What? Just keep doing that. Throw in any numbers and wait for them to calculate it for you properly, and you save yourself
Yeah,
the
yeah.
time and hassle of doing it."
Yeah. You ever dealt with the IRS, Tony?
No, wonderful
Yeah.
people, I hear.
I don't think they're
Uh,
the kind of people you want to mess with. I think they'll just throw you in jail and say, we'll
okay.
let you out when you fill in the correct form, when your numbers agree with our numbers. But you do make a good point. I do think AI is going to make completing these things a lot easier. So maybe that hurdle will start
Mm.
to go away in the future. Anyway, it's just something to be aware of if you're an American and you're thinking about investing in PFIC. Earnings quality versus the headline numbers are interesting. Now, when you hear ORIX made 2.3 US billion last year, remember about 460 million of that was one-off gains from selling assets. So you
Right.
take that away and the core business still earned roughly 1.8 US billion, but it trims its return on equity from about 9% to something closer than 7%. So analysts tend to, as I said before, tend to base their valuation on the lower figures. From my perspective, though, the company is still generating lots of cash, and it's been around a long time. The guys running it have been around a long time. They seem to know what they're doing. If you look at their long-term share price, there's not a lot of growth in it, though. So that's the flip side to that argument because of this issue with Japanese share prices, as I mentioned before. There's also an issue which is interesting. If you value each part of the business separately, like if you break life insurance and asset management and all of these different parts up, and then you value them individually, you get about 31 to 33 billion US, according to GPT's sum of the parts valuation. I did go through its calculation. I won't bore you with it here, but the stock market values the whole group at roughly US $21 billion. So there's like a 30% gap of what's called a conglomerate discount between what the Gordon Gekko sum of the parts thing would be if you broke it all up and sold it off, like blue, what was it? Blue.
Anaconda likes blue something steel.
Yeah. God damn, I've got to watch the movie again. Versus what it actually gets valued at. It's also some of the risks. There's a lot of big projects. I mentioned that it does a lot of crazy stuff. So ORIX and MGM are sinking about $10 billion into Japan's first casino resort in Osaka. Not going to open until 2030, so the cash flows from that are years away, but who doesn't want to go to a Japanese casino resort? That sounds like fun right from the get-go.
In the hometown of the Buffaloes, too.
They've also recently bought a cosmetics company, DHC, in the US, and a distressed asset firm, Hilco Global. So, they're, as I said at the beginning, a bit like Berkshire. They're building stuff, they're buying stuff, they've got this venture, that venture. Some of them are dubious, some of them are risky, some of them have like cash flows that are years away. So I think the markets are a little bit shy on those things as well. But again, fascinating business.
There is a school of market, of fund manager who says, I won't own a conglomerate because I might like the leasing part of ORIX, but I don't like the casino part of ORIX. And if I want to hold a portfolio that includes both, I'll buy a leasing stock and I'll buy a casino stock. So
yeah,
that's one of the reasons why conglomerates have a discount. I'm not sure I subscribe to that, but that is at least a fairly large number of fund managers will think that way.
Yeah, they want somebody who's focused on something rather than spread thinly. They also have an airport that they have a joint venture in. I mentioned the cosmetics company, Panasonic projector. They're going to own 80% of Panasonic's Connect Pro projector and display unit business. Panasonic's keeping 20%. Renewables and storage pipeline. They've got a wind farm that they're building, utility scale batteries. I mean, all sorts of really interesting projects, but aren't finance leasing. They're paying a dividend yield of about 1.6%. That's after the ADR fees and currency transaction, foreign exchange stuff adjustments are done. Yeah. They've also authorised a buyback of about 3.5% this year, buying back the stock below book value. So that's probably good for shareholders over the long term. Bottom line is that it's a well-run, diversified conglomerate finance group / whatever takes our interest this year and looks cheap.
Baseball team. And you can buy it for 90 cents in the dollar.
Yeah. And it looks cheap to us because, as I said, Japanese financials start life below book. US tax rules scare off a big chunk of US
Mm-hmm.
investor market, and the headline profits jump around depending on when they're selling an asset or when they're not, so it's complicated. But if management keeps cancelling stock through buybacks, delivers on some of these projects like the Osaka Resort, etc., it's a good little business, well run, and it's cheap,
Mm-hmm.
and it scores well. But I'll take you through the QAV scoring and explain some of the complexities here. So, as I mentioned at the outset, the price to operating cash flow is quite low. It's 2.68. But again, as we've said, when you're looking at financial services companies, and particularly companies like this that sell things one off, that can be lumpy. But my other school of thought is what it is right now, right?
Mm.
This is a business that's making cash and is well run. So if you can buy it at a discount, or not discount, but at a cheap multiple to its operating cash flow, then that's what you're doing, right?
Mm.
It has a fairly low quality rank on Stockopedia. It's got a 39, so we don't score it for that. It has to be 60 or better for us to give it a score for that. It's also got a low stock rank in Stockopedia. It's on a 61. We only score it if it's equal or better than 90. So I'm not scoring it for either of those. However, its
And
F score is good. What?
sorry, I was just going to say, we've seen this before with finance companies that they get a low quality rating in Stockopedia.
Yeah.
Now, I know this is a conglomerate, but I wonder if that's got something to do with it, because generally, I think because they hold lots of debt, which if you're a finance company is not a bad thing. It means as long as you're lending it out with a margin, it's a great thing if the debt's growing. So, yeah, we've seen this before with Stockopedia. So I'm not all that worried about a low quality ranking in Stockopedia for this company.
Yeah, me either. And you talk about debt, their F score, their financial score is actually pretty good. It's a
Right.
5, which is on the low end of good, but it's above 4.5. We'll give them a score if they're equal to or greater than 4.5.
Hmm.
So it gets a score for F score, and F scores, the financial health of the business is the main one that I'm interested in, and it's doing okay from that perspective. Doesn't have a Z score, because that doesn't work for financial companies, as we've learned before. The Altman model needs working capital over total assets and sales over total assets to be calculated. Doesn't really work. But here's where we get into some issues. So the QAV IV number 1 is tricky. So when I ran the checklist, it gave it an IV number 1 of $1,711. The share
Hmm.
price is currently $21.
Fantastic.
So that is a very good IV1.
Huh.
So the price is less than the IV number 1, but that's when I worked out that Stockopedia is reporting the EPS. So for new listeners, our IV number 1, we don't use a classic Buffett IV calculation. Tony's developed a quick and dirty IV calculation, which is
Oh, it
current.
comes from the Warren Buffett workbook, so it wasn't mine, but I picked it up.
Oh,
Yeah.
was it? Oh,
Yeah.
I thought you I thought there's your hack. Yeah,
No.
so it's current EPS over a hurdle rate, and our hurdle rate is 19.5%. But if you look at the EPS in Stockopedia, it's 333 yen, and the price is in US dollars when we're looking at the ADR price. So that's why it comes out at $1,700 in our thing. So when I convert the EPS from yen into USD, which is about 155 yen at the moment, it brings the 333 EPS down to $2.15, which makes the IV number 1 $11, which is less than the current share price. So I backed that out of our scoring, gave it a 0 instead of a 1 for is it less than the IV1. But IV2, actually, it's still scored for. So IV2, intrinsic value number 2 in our calculation, is future EPS over the market hurdle rate. As I said last time, I'm currently using a market hurdle rate of about 10.33%. The future EPS forecast 1 year in Stockopedia for ORIX is 355 yen. If I convert that to USD, it's $2.29. So future EPS over the market hurdle rate is $22.16, which is higher than $21, the current share price. So it's still got a score for that, even when I calculated it in USD.
Big question on that hurdle rate. Are you using the US hash rate in that calculation?
I am,
yeah.
Yeah, I'm using 4.33%, which is I get from, I can't remember now, some US site. Price to book is also problematic because book is reported in yen. But again, when I did the calculation for that, it still worked out well. The book was about $23 USD. Price is $21. As I said earlier, still buying it for, what we said, 90 cents on the dollar, more or less. Yeah. So price less than book, yes. Price less than book plus 30, yes. So it got scores for both of those. Growth over PE is got a 0 for that, both in yen, but it's still got a 0 for that. Book value growth over 3 years is positive, though, so I could score it for that. PE is not less than the yield. Yield is not less than the back debt. The last one here is forecast IV greater than 2 times the share price. Again, the forecast IV was messed up because it was in yen. So my scoring initially, checklist gave it a yes. I backed it out, gave it a no. So when I reversed the wrong scores and entered the right scores into the checklist, number of items were 14, got a score of 9, quality score from our perspective of 64%, a lot higher than Stockopedia's quality score. And it got a QAV score at the end of the day of 0.24. So
that's good.
Even when I corrected it, it still came out with a good score. We don't own it. It's not in our portfolio. But based on everything that you now know about IX, Tony, if we were looking to add a stock to our US portfolio, what would you say, yay or nay?
Oh, yay. I love it. Sounds great. And it's a dummy portfolio, so we don't need to do the tax reporting, but that might be a deal breaker for a lot of our listeners in the States. But no, sounds very, very interesting and promising.
As I said, though, earlier, if I look at the share price history in Stockopedia, it's had a bit of growth, but not a lot. But, I never used
I was looking at
price
the
history as a
breadlater.
guide. Yeah.
I was using the breadlater anyway, and if you go back 5 years ago and it was worth $10.80 and now it's $21, so it's doubled in 5 years. So that's CAGR of, nearly 15%, which is good.
Yeah.
Yeah. And it's a recent upturn, so I'm not sure what the reason was for kicking it up above our byline, but something's happened recently, probably the latest results. So it's do you think it's in a good space?
Yeah, and I was going to finish by saying, like, long-term price history isn't something that I take into my calculations. I'm looking at the quality of the business today. Is it generating cash? Is it well run? Can we get it at a good price? And it certainly checks all those boxes for me. And I like the fact that it's messy and difficult for American funds to buy and analysts to analyze. To me, that's a win, because if we think something's a good bargain, even if everyone else doesn't because it's too complicated or messy, then we might be right and they might be wrong.
I do wonder, and I have no knowledge of this before I open my mouth, but I do wonder if someone's offering a product to be able to invest in this kind of company without going through that tax reporting process. you do see it in some cases that, some smart Wall Street banker has put together a fund that does all the paperwork for you and you invest in the fund. So kind of backs to back to performance. I'm not aware of it in this case, but again, if someone out there is listening and knows of a hack around the tax reporting, it'd be great to hear from you.
I like your hack. Just get GPT to do it.
Yeah.
All right. Well, that's IX. I found it again really interesting and so out of. I mean, I've got a lot more research on all the businesses that they own and they're buying, and it's I could go on for hours, but check it out. Interesting company.
Thanks, Cam.
Well, with that, stay safe, America. My son's back in LA now. I couldn't talk him into staying, so he flew back to LA on Saturday, and I saw there were millions of people out on the streets, et cetera, so a few casualties in that process, so sadly. So anyway, stay safe wherever you are, Australia, America, listening to this. Have a good week. Happy NYSE, and we'll talk to you next week.
Happy NYSE. Thanks, Cam.
Thank you, Tony.